Warren Buffett once called Bitcoin rat poison squared, but what if I told you the same man who doesn't touch crypto could actually help you make better decisions than 90% of traders? So in this video, I'll be breaking down Warren Buffett's timeless rules for investing and how I'm applying it to crypto. So if you're somebody with a lot of funds and really looking to scale, watch to the end of this video. This video is designed for you. So first things first, who is Warren Buffett and why does this matter? He's arguably one of the greatest investors of all time. He is the CEO of a very successful company, Berkshire Hathaway, and has a net worth of over $134 billion and over 70 years of investing experience. And this guy turned $10,000 at 20 to over $100 billion by following this one playbook that we'll dive into. And guess what? He hates crypto, but his rules are asset agnostic, meaning that they work in stocks, real estate, and yes, even crypto if you apply the investing principles. He's even known for calling crypto and Bitcoin rat poison squared. This is also because he has his own interest in the banking system and Bitcoin's kind of against that. But without further ado, let's dive into the real investing principles that lead to success, which also apply to crypto and how I am using this. So rule number one, which is actually two rules. And Warren Buffett's two rules in investing are rule number one, never lose money. And rule number two, never forget rule number one. Because let's be real, you make money, you lose money in crypto, but the volatility of crypto is insane. And if you can maximize not losing, meaning maximize not getting scammed, maximize not making the mistakes that most people make of, FOMOing in at the top, selling the bottom, the basic things, then you set yourself up for success by maximizing not losing. And that is exactly what this rule is telling us. This is why, you should have a plan, a system, even for trades, set stop losses, manage your positioning sizes, and only invest in assets with long-term utility like Bitcoin, or if you are in shorter things, because I definitely don't follow this 100%, have a plan, have a strategy, and don't be like most people that end up losing by over-leveraging and just falling into the common mistakes. And so you don't want to be the person that sets themselves up for constant losses, right? You want to set yourself up for success. And also, Warren Buffett is very strict and respects his money. That's why never lose money. That's a really hard task with investing. That's why he's very strict. You respect your money. You just don't throw it around and gamble. You got to take it serious and professionally. And that's also what has led to Warren's success. So now to rule number two, understanding what you buy, right? Back to the point of not just gambling and throw your money on random things, right? Warren Buffett doesn't invest in tech that he doesn't get, right? He skipped out on the dot-com stocks in 2000 that were going crazy. Everybody was telling him that, you're missing the next big thing, which in one sense he was, but that ended up being a huge bubble. And he was the one that actually came out on the other side of it, survived the crash with a whole bunch of cash that, reallocated into things that he actually knows. So back to this rule of understanding what you buy, whatever you're buying, right? You should understand, what is the thesis? Why are you buying? How do you plan on exiting and selling? Understanding the tokenomics, the basic info of a token, right? What's the narrative? All these things. The same rules apply to crypto, not falling into the shiny object syndrome of whatever's hot, throwing all your money in that, And these same rules apply to crypto. If you don't understand, how layer ones work, a DeFi protocol, or the tokenomics of a project, or the narrative for that sense, right? You're gambling at this point, right? You're not actually investing because, especially in crypto, there's this thing called shiny object syndrome where there's always a new hot thing, whether it's meme coins, AI agents. And if you're really good at one thing and that doesn't align with it, don't go out of your way to, set yourself up for losses just because it seems hot and new. You got to be able to stay disciplined into what you're good at and what you understand, right? Instead of just gambling. Now to rule number three, flip the crowd mindset. And I absolutely love this quote by Warren Buffett. Be fearful when others are greedy and be greedy when others are fearful. This is very, very powerful, especially when we apply this to crypto. So a lot of you guys probably already know the fear and greed index. When it's at 0 to 10, this shows that the market is in extreme fear. And then when it's about 80 plus, it's extreme greed. And usually when we're at 80 plus, this is when everybody's talking about crypto when we're probably at a top, right? And everybody ends up buying the top and falling into the greed and the euphoria. And the flip side of this, when this crashes and it's at, let's say, 10, everybody's crying, nobody's interested in crypto, everybody has sold. But really, this is the opposite of what you should be doing, right? If we see in 2020, for example, during the COVID crash, this was a massive fear moment. The fear and greed index was at like 0 or 10, right? And that's the time when you should actually be greedy in buying. And then during a top, like we saw in 2021, that's the time to actually be selling and getting fearful because all the liquidity is already in and, a bear market ended up coming very soon. So what do smart investors do about this? They accumulate during the fearful times, during the bear market, and they stay calm during the hype, the euphoria, and actually be able to stick to a plan and take your profits, take your life-changing money instead of just being a bag holder and getting into fantasy land euphoria. So that's at least my take on it when it comes to crypto. Now to rule number 4, look for moats. And Warren Buffett loves his moats, right? And what this really is things that protect you from competition, right? So let's apply this to crypto, right? What is the moat of a token like Pepe or Doge? Or actually, let's go even higher risk, like a random, meme coin on Solana, right? Not much, because there's so much competition when there's thousands of meme coins on Solana. There's nothing that really separates you from the competition, right? Now let's compare it to something like Ethereum, which has actually started to take off recently. It has a network effect, right? It has the developer community. It has real world use cases. Like even more recently, we've had big stablecoin bills get passed in the US. This is the moat around Ethereum, which is now a key moat that is bidding the price higher in Ethereum, translating to higher prices, and obviously, an asset that has been thriving. And so if a token doesn't have a moat or a real reason or a real narrative, right, it probably won't survive a bear market like 99% of things. So very, very powerful. Look for moats, look for real reasons to actually buy, and some protection from the competition in what separates. Now to rule number 5. Think in terms of decades, which now to another great quote from Warren Buffett. If you are not willing to own a stock for 10 years, don't even think about owning it for 10 minutes. Now, obviously, crypto is a lot more high frequency and faster paced, but let's think about this for crypto, right? Are you holding tokens right now that you'd be comfortable holding for the next 10, 20, 30 years? Because when you're thinking in those terms, you're not thinking in terms of what everybody's thinking about, the hype, what's hot right now. You're thinking in terms of this has a real use case that can actually change the world, and that could actually 100x over the next few decades instead of just focusing on the short term right now. So this is when you think about really good fundamental technology, obviously. And that's why most crypto investors, flip tokens in every 10 minutes, right? And that's why 90% of people lose instead of thinking longer term, even if it's not just a token that you're going to be holding for 10 years, thinking what is your investing strategy and process that is going to get you on the brighter side of 10 years through, flipping trades and through investing over the 10 years, right? So having a longer term time horizon, so buying strong assets, obviously over the long term, dollar cost averaging into Bitcoin. It's been a very effective strategy, and holding through cycles. I would argue definitely not for altcoins, but Bitcoin, buying those bottoms, DCAing over time, very, very powerful. And back to the point of thinking in decades, it's not like you have to hold one token for 10, 20 years. Sure, there might be some good fundamental technology that, isn't priced in right now that thrives over the next 20 years. But, having a real system, process, strategy that sets you up for success over the next few years that you can keep on compounding over the years. And I won't spend too much time on this chart. It's pretty self-explanatory. If you have been in crypto long enough, specifically Bitcoin, you're in profit over time if you continuously DCA over time and stick with it and, think longer term. You're clearly looking really, really good. If you bought Bitcoin at any time, during the last, 10, 15 years. So think longer term and, don't trade the noise, hold the signal, think longer term and set yourself up for success over the long term. So Now I want to touch on why Buffett's rules still work. So no, Warren Buffett doesn't believe in crypto, but his principles, they're bulletproof, right? So to recap what we learned today, avoid the unnecessary losses, maximize not losing, set yourself up for success, not losses, which is what most people do, and invest in only what you understand, invest in your edge, don't fall into the shiny object syndrome, be greedy when others are fearful, not falling into the sentiment that you see on X and what everybody's thinking. That's also why most people lose. And then look for long-term moats. What is the thing in the outlier of the token that you're in that's actually going to separate it and set it up for success? And then think in 10-year windows, think longer term, right? And so if you actually apply these, you'll be 100 steps ahead of the average crypto bro chasing pump and dumps, and you'll actually be setting yourself up for success. And so if you want to join the smarter side of crypto, you want more frameworks like this and actually apply billionaire investing principles with modern assets, like, share, subscribe, and the way I'm actually investing in crypto. And also, if you're interested in real quantitative systems to help you position in crypto, that is exactly how I've outperformed Bitcoin and made life-changing money in crypto. Here are back-tested stats for our quant. We have outperformed Bitcoin and have done really, really well with lower drawdowns than Bitcoin by maximizing not losing and applying these principles, but in a completely systematic, data-driven approach. This is a really high-level system. If you want to learn more about this, there's a video about it. I'll link down below in the subscription. Highly recommend you check it out. There's a really good presentation that I also go over if you're really serious about succeeding with more capital in crypto. But that's it for today. Much love, everybody, and see you in the next video.